Today we'll be showing a dip and rip setup from Target on 11/18 after they reported earnings. The earnings report was much more positive than expected. They beat EPS by $1 and beat on revenue. Comparable sales were up 20% above the estimates, and gross margins rose 80 basis points. So, a lot of positives for this. They were talking about how their online sales and business is strong even during COVID, and they were happy about that. And that's a major reason for this gap up. This top left chart shows the 5-minute chart with this gap up from about $163 to $168.30 as the high in the pre-market. And we'll be watching how this reacts off the open, how it pulls into a major support level at this 164.50 from the pre-market, and how we really hold there and then turn around to the upside. So we'll mention this had 50 times our vol on this day off the open, which is something very attractive for us. The higher the R vol, the higher chance that we have an outsized move to either direction for outsized risk to reward, and that's a really big reason why this is a name in play alongside the gap up and strong earnings. So we'll play it from the market open here, opening up at around $165 and like 50 cents, kind of on this support level, which we've been playing around in the pre-market. First minute is pretty slow, takes some time for volume to come in, might be a slightly delayed open.
Yeah, this did take a minute or two to open up.
So yeah, we'll just show the first minute or two on the tape here to show how it kind of works its way down into the next support level at 164.50.
You guys are a little bit more advanced. What you mean by that is it's taking a couple minutes for the specialist to open up the stock. So it's 9:30, but it's still not trading at full capacity.
Exactly. The majority of the volume that can come in hasn't really gone through yet from those bigger desks or fund managers.
And if this was a NASDAQ stock, you wouldn't have to check that. The order flow would just come right in at its highest peak starting at 9:30. But when you're trading a New York Stock Exchange listed stock, sometimes it doesn't quite open at 9:30 on the dot. It takes the specialist a little bit longer to figure out how to match some orders for the opening and balance. And after that, then they're ready to rock and roll.
Especially on a day like this where we're doing so much more volume than they're used to pairing on the open.
Good point, Houston. That is one thing you want to check, though. If you're looking for an opening drive trade and you're in a New York Stock Exchange listed stock, you do want to make sure it's actually open. There are some times when you think it's open and it goes down 50 cents and it's not quite open and you're reacting to that 50-cent down move, but the volume's not there. So you are in jeopardy of a quick snack back that surprises you because it's not really open, or worse, a snapback or worse. So
Absolutely.
great for the newest guys. Make sure the stock's open first.
Yep. And that's why you'll see I don't really take a trade in this until the volume comes in and I'm sure that this is getting ready to trade.
And I'm sorry, the way you tell that is NYSE will come in on the bid and the offer, and also you'll just see the prints going a lot faster in the box.
Exactly. So we'll see the first major pull in here to 164.50, where I'll have a quick entry when it pulls into that level, really respects it and snaps back quickly. So we have the NYSE orders in there now. Definitely more volume going through.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
We can see right here we're coming into the 164.50, and we never even get below that level. The bids hold right at 55 cents, can't break down, start to move back up 20 cents, and this is what gets me long at this 164.80. There's a lot of variables in my mind here. Strong gap up in the pre-market. We did hold most of the gap. Strong earnings. Dip and rip setup has been very common recently. And just knowing that since that support level was respected so quickly and so well, once it was open and the volume came in, it really gave me good confidence to hold this for a move to the upside, risking that 164.50 level. And you'll see here I'm putting in my hard stop at 164.42, so if we get a flush under that 50 level, I'll take it all off there. But otherwise, kind of holding this, thinking we can get a move back to 167, kind of this mid pre-market range, take profits into there, and then see if this can really trend to new highs.
Hey Matt, how'd you come up with 42 cents?
So 42 cents was a little bit arbitrary in the sense that 164.55 held, but I often know on these opening drives that they'll test a little bit above and below levels to get out the weak hands, especially when it's moving more volatile on the open. So I often like to give myself just a little bit more room over that level and see if we really kind of hold below that level. Because if we just wick through 55 to like 50 and then come back and then there's buyers, that's good. But if we really get under that 50 cents, by like at least like 8 cents, like at 10 cents, then the trade's kind of over to me. I just want to give myself that little bit more room because this type of trade can have such outsized risk to reward, risking like 30, 40, 50 cents looking for 4, 5, 6 points. So I think giving yourself that little bit of wiggle room over the major level you saw can be important in these opening 5 minutes. So now we'll see how we hold this 165 level and come to 166 or 165.50, where we're kind of broke down from in the morning and we're holding. And you can just see this is such a change of character, how quickly this is breaking out to the upside, volumes coming in, large 1 minute candle. This is telling me there were real buyers down there. This isn't just like a quick move up to test the level. This is a real strong open with buying coming in, offers getting taken out, bids constantly holding higher and respecting these pre-market levels. So we can see I sold 25% into 166.28, so kind of just over this 166.50 level, which I knew was minor resistance, cover some profits in as these opening drives can come back rather quickly. Like here, we've already come back about a point from that breakout. But I still thinking the same thing with my stop. Maybe make it a little tighter under 165 now, which I'm updating to 164.93. Kind of thinking, all right, get a little tighter. If it breaks back down to 164.50, that's looking way too weak. I don't need to sit through that. And 165 did kind of hold from the major breakout.
And let me butt in here and say that another change in character we see with this setup is one, getting over the opening price when we rip back up. That's a place where I usually get in or add to my position. And then two, the spread tightens up a ridiculous amount, and that shows you that, the trade is really starting to come on in a big way. Earlier in the trade, towards the bottom of the range, the spread is like 40, 35 cents. But then when we're really accelerating, that spread tightens up to 10, 15 cents, which in a stock like this can be dramatic.
Yeah, that's a really good point. That's definitely an indicator of strength and another check in our favor when the spread's tightening up as it moves in that direction, showing there's definitely more orders getting involved now. So this trade's going to take a little bit of time to play out. I'll skip ahead here soon in terms of just watching the pullback, seeing if we still hold higher and don't break below that morning low, which is where we're really giving it to. So as we skip ahead a little, we can see that pull-in really held. Then we come to this previous resistance, hold, and then break higher. So I still have 2/3 my position on, and right there I sold another 1/4, getting me down to a half my position. Sold at 168.12, knowing this 168 was kind of a level in the pre-market respected here.
Question for you. At any time after the bottom, after you see the dip part of the dip and rip, so it pulls in and you see the bottom from that move. After that's put in, do you see at a higher level an opportunity to add to your position or put on a little bit more risk, or that's not part of this type of trade for you?
So I definitely think the add spot for me would have been the first major pullback after we broke to 166.50, when we really pulled back, and this 165.50 started to support. We clearly held higher after a major breakout, and then we start to pick back up to the upside on a little bit of lower volume before an explosive move. So I think this support level, which we'd kind of noted and kind of reclaimed a little bit, could have been an area to add. But on these trades, I'm definitely more comfortable just going for more aggressive price targets and not always adding, but definitely knowing these can have really large moves. So giving myself that potential with still having half my shares over this new all-time high, as this 168.30 in the pre-market was the new all-time high of the stock. So here we're just going to keep watching how this kind of breakout develops. Like I said, we're often going to pull back under these important levels after a breakout through them, especially when we're at new all-time highs in a stock. They need to develop the price levels and support levels, and it takes a little bit longer to do that when there isn't clear technical chart levels. So watching the tape is pretty important on these breakouts and noticing how it's reacting after a breakout. How far is it usually pulling back? What type of speed is it pulling back on? Am I getting a change of character in that sense on the tape? Maybe that's a reason to trim. In this case, I really think this is holding well again. Gets under this 168, which he broke out from. Can't really hold below. Some bidders are still getting involved there, and we're starting to chop around that level. So that's giving me confidence to hold the second half of my shares to see if we can really keep trending the upside. I mean, at all-time highs on 12 times RVOL still, this is a great candidate to keep moving on the day.
Yeah, I want to point something out in terms of psychology. Always good to think about who's on the other side of the trade. So your second yellow line show in the pre-market. So if we look in the pre-market, your second yellow line.
This one at 167.42? Okay. This was the prior all-time high coming into the day as well.
And then so you see at 8:30, we start to roll over from that support, right?
Yep, right here.
All right, so when we roll over from that support, momentum day traders are going to do what?
They're going to get short that level.
They're going to get short. That's a short pattern. They're going to say, maybe the stock's up too much. It should pull in a little bit. I'm going to get short. It's not holding these higher support levels. And that's different than what it had been doing in the pre-market. And then, so it goes down, has a nice pull in, and then it pops back up to like that a little bit around that 167 area, but below that 167.50 area. And it makes a what?
Makes a
Looking
top.
at the pre-market. It makes a lower high, right? From that. So there are some more people. So when people see that lower high, what are they doing?
They're getting short again.
They're getting short.
Yeah, into the breakdown or into the pop as well.
Yeah. And then you're seeing, and then you see the stock make actually a new low right when we open up, right?
Yep.
And so there are people doing what?
There are people hitting the momentum short there
Yeah,
probably through the lows.
yeah. And so there are three areas where momentum traders are short. And so when you pop back up towards that 167 area, and then you start to go back up again, you're getting the people who shorted the lower high out. And then when you get that move back up towards 167.50 and get above there, you're getting people to start to think that the momentum is not to the downside anymore. So you just always want to be thinking in the back of your head, hey, is the momentum on a short-term basis as an active trader, is it down or is it up? And you want to be cognizant of it's not down anymore, because we need something new for people to think it's going to be down. It made new highs. It got above previous resistance areas. And again, these are very short-term charts. But that intraday momentum is not as bearish for these people anymore. Does that make sense?
Agreed. Yeah, and I like to use the 5-minute chart as well personally to try and get that bigger picture idea, which is my top left chart here. And we can see that once we break out and then we're really holding higher on the 5-minute over the 21 EMA and VWAP, it's definitely looking a little better from a longer term as well.
100%. And I think that when you're trading, when we're trading right on the open, we're looking at shorter time frames. And then as the day goes on, what a lot of really good traders do is they start to look at longer term charts. So on the open, some people might even trade a tick chart.
Right.
Some people may look at a 1-minute chart right on the open. And then in the same stock, they may say, well, after 10:30, I'm not obviously making opening drive plays anymore. Maybe I'm going to start to look for some swing trades. I'm going to go to a different section of my playbook. For that, I'm going to look at a 5-minute chart, a 15-minute chart to see where we are with those.
Agreed. And I often trade on a little bit shorter of a time frame, as the morning session up till 11 a.m. is my strongest trading hours, so I definitely am working on talking with guys that trade later in the day in my class and kind of seeing how they're developing longer term chart patterns, interpreting volume, and kind of interpreting the technicals for the longer term. So that's definitely a reason why I have this hourly chart up here in the 5-minute. As the day goes on, I'm trying to think a little bigger picture where
your
people
results are
involved.
best right on the open.
Yes, the first half hour is my best results by far so far. So
Yeah, and you're going to want a different playbook for different time periods. So the way we're going to trade in the first 45 minutes of the day is not how we're going to trade after 10:30 or after 11.
Definitely.
Yeah, so good to notice that.
Great. So I will skip ahead now to where I actually do get stopped out of this trade before the second leg, as the pullback's just not really what I was hoping for. It's a little steeper here. We start holding below this prior all-time high. Like I said, I trade a little shorter term. So I was kind of watching this purple line. You can barely see it over the blue one there, but that's my 21 EMA on the 5-minute. And I like to use that as we get to this like 9:50, 10 o'clock area for leaving on a potential trend in my shares. And so soon here we are going to wick below that level at 166.43 and kind of stop me out there. As you can see, it's kind of a harsh pullback, not quite what I was expecting. And then it'll have one more move that really stops out a lot of weak longs, weak longs. And you can see this wick right back down to 166.50 and it rebids. So I was glad I was out before this, because this would have stopped me out regardless. But I want to show the power of sticking with this trade or sticking with the stock and looking at the higher time frame, and really what you could have captured on the second leg here, as these wicks could have been potential re-ads, or when you see it hold higher here. And then we are going to break out to another new all-time high after a pretty steep pullback. But you can see on the 5-minute, never really did break back through that pre-market low or anything of that nature, and it was somewhat of a higher low. So yeah, that really shows there was another 2, 3, almost 4 points left on the table, as this went even higher on the day, I believe. So yeah, it kind of shows how I'm using the 1 minute charts, and sometimes you get stopped out a little earlier, but it also keeps your risk a bit tighter, and then trying to identify the larger time frame trade is now what I'm working on, and that's why I didn't quite take this trade, as I know I'm a little weaker in it, and I want to watch how they develop more. And this one, just these pullbacks were a little too harsh for me to really have confidence to get back in again. So yeah, that's mostly what we have for you. Earnings to all-time highs and a strong name, a strong sector in terms of online sales during COVID, and then the clear buying in the tape off pre-market levels, leading to pretty strong move to the upside.
I mean, who doesn't love to go to Target?
Exactly, they got a little bit of everything there.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.